Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about the best ETFs that you can buy to build wealth over the long term. These ETFs, if you can buy into them consistently and dollar cost average into them, you can either retire early or on time while also building an extreme amount of wealth. These ETFs are also very safe, much safer than regular single stocks. In this video, we are going to compare some of the most popular ETFs, such as VTI, QQQ, ARKK, SPHD, ARKG, VGT, VOO, SPY, VYM, and USO. On screen, we have a quick summary of the ETF ticker symbols which I just named, the names of these various ETFs and who they're by, the space that they operate in, the number of holdings that you will be diversified into if you decide to invest into one of these ETFs, their expense ratios, their dividend yield, and of course their 5-year returns. So we are going to decide which is the best ETF to invest into out of these top 10 popular ETFs. For more videos on how to grow your wealth safely, remember to go and smash that like button right now, subscribe if you're new, comment your thoughts down below in your favorite ETF, and without further ado, let's jump right into today's video. So just off the bat, I have highlighted some of my personal favorite ETFs, which is going to be VOO and SPY, and investors tend to compare these ETFs, but in my mind, there is no comparison. I like VOO better than SPY for two reasons. The first reason is that it has a lower expense ratio than SPY, which means we get to keep more of our money and it doesn't go to the company or people that actually have set up this ETF. Secondly, it has a higher dividend yield, which makes it a better passive income ETF. However, with that being said, let's determine which is the best ETF out of these top 10. As you can see on screen, I've highlighted the ETFs that are normally compared to each other. I have two ETFs that clearly have the dividend advantage, and in our calculations, we are going to include dividend appreciation over time, so we are going to use a drip investing forecast model. And then lastly, I have 4 ETFs that have all returned over 100% in the last 5 years, which is absolutely insane. I also want to mention that I'm going to compare them in orders 1 through 10. So we're going to start off with number 1, which is USO, which is the United States Oil Fund, and we are going to compare it to number 2, which is SPHD, and we are just going to go on from there. So our first comparison is between SPHD and USO, and of course SPHD absolutely destroys USO. The data on screen, you can see the visual representation from the chart over to the right of a hypothetical $10,000 investment with all dividends reinvested. We have the start date, end date, the starting price of the shares, the ending price of the shares, the starting share amount, the ending share amount, the amount of dividends reinvested, their total return, and of course their average annual return on top of the starting investment amount and the ending investment amount. So what we really want to focus on is going to be their total return, their average return, and the end investment. And those are going to help us determine which one is a winner. And for this particular comparison, SPHD destroys USO. So that means SPHD moves on. So now we are going to compare SPHD against our number 3 spot, which is VYM, which is Vanguard's high dividend yield ETF. So we are comparing both of the high dividend yield ETFs. However, let's see which one comes out on top. And when we compare them, VYM actually beats SPHD from the arbitrary date that the model generated for us, which is 2012. As you can see on screen, the total return for VYM is 205%, while the total return for SPHD was only 168%, and this would turn our $10,000 investment into over $30,000 with VYM, when on the other hand, it would only turn into $26,000 and some change for SPHD. That means VYM moves on and SPHD is now knocked out of the race. We will then compare VYM to our number 4 spot, which is VTI, which is a crowd favorite. So when comparing these two ETFs to one another, we can see that VTI is our new leader because they took that hypothetical $10,000 investment back in 2007 and turned it into $43,000. So this is around a 15.24 year time span, and it clearly beats the average annual return of VYM, thus making VTI a better ETF to invest into, in my personal opinion. Now that we have VTI, which is our new champion, we are going to compare VTI against SPY. VTI, if you didn't know, is the total stock market fund by Vanguard, while SPY is the Spider S&P 500 ETF, so it is more concentrated than VTI. However, normally they get similar results, but let's see what the actual scorecard says when we compare these two ETFs. And from the comparison, we can see that VTI barely outperforms SPY when we have the starting date at 2007. Literally, VTI just beats SPY by less than $300 per share. As you can see on the graph, they are extremely similar in their overall returns, and to me, it just depends which one you want. However, I personally would go to VTI because it's more diversified, and to me, that is just really good risk management. However, now that VTI has proved themselves, let's see if it can go against the SPY competitor of VOO. So when we compare VOO to VTI, we are going to get a very strange outcome. So starting in 2010, we can see that VOO actually barely outpaces VTI by just under $1,200. So this not only means that VOO is better than SPY, it also means that VOO is better than VTI. So in my opinion, I would pick VOO over VTI and SPY if I want to dollar cost average into a very stable S&P 500 ETF. And VOO has been building people's wealth for many, many years, and it's one of my all-time favorite ETFs to invest into. Again, more than 60% of my portfolio is invested into safe ETFs, and that's how I build wealth and maintain wealth over the long term without losing it. It also saves you from, if the stock market crashes or if it's very volatile, being invested into one ETF that can diversify you in around 500 holdings is very good risk management because it spreads the risk of any losses out throughout a plethora and a multitude of various companies. But now I want to move on to VOO's next competitor. Can VOO beat a very popular ETF by Cathie Wood that is called ARKG? And ARKG and ARKK by ARK Invest are some of my favorite ETFs, which are both on this list, so I'm very excited to see that. So let's see if VOO can beat ARKG in our next slide. So surprisingly, VOO can beat out ARKG at this time, but I really want to put your attention toward the chart. Look at ARKG. Imagine if it was up here. ARKG has pulled back extremely aggressively, and without this pullback, clearly they would outperform VOO by a very large margin. However, because ARKG and other ARK ETFs have pulled back so much recently, we have to give VOO the victory as of right now, but this could definitely change in the future. Once ARKG and these healthcare genomic companies end up appreciating again, we can see it outperform VOO. However, at the time of this video, VOO is not only a safer investment, but it is outperforming ARKG. But like I said earlier, the only reason for this is because ARKG has had a massive pullback in the companies that are currently being held in that ETF. But with that being said, it is still one of my favorite ETFs to invest into. So VOO is looking very strong right now, undefeated so far, but let's see how it stacks up against QQQ. And QQQ is probably one of the most popular ETFs among retail investors. I would say that VTI and QQQ are most likely the bread and butter of retail investors, and for good reason, because QQQ and VTI are phenomenal holdings and ETFs to dollar cost average into to build wealth over the long term. However, when we compare VOO to QQQ, let's see which one comes out on top. We are comparing basically the NASDAQ 100, which is QQQ, to the S&P 500, which is VOO. However, which one is going to come out on top? Well, QQQ drastically and radically outperforms VOO almost 2-to-1 in this particular scenario. And the reason for this is that because QQQ is less diversified and it's technically more risky than VOO, it also has a greater chance of stock price appreciation and further upside. However, if we remind ourselves what happened to ARKG, we could see a huge cutback in terms of technology, and we could see QQQ fall below VOO in the future. However, I personally don't think that's going to happen, and I am a huge fan of QQQ, even putting it above VOO in terms of my favorite ETFs to invest into to build wealth over the long term. So in this ETF battle, we can see that VOO has actually lost out to QQQ for good reason. But now let's see if another company can dethrone QQQ, which is our new champion. But we are running out of ETFs. QQQ's next contender will would be ARKK, which is another ARK Invest favorite by Cathie Wood, and that's the ARK Innovation ETF, which takes mid-cap growth companies that are going to become large-cap growth companies in the future. So let's see how these ETFs stack up against one another. And to many people's dismay, QQQ barely outperforms ARKK due to the recent pullback that we have seen in ARK Invest ETFs. We see the same type of pullback that we saw in the ARKG ETF or the ARK Genomic Revolution ETF. However, if we didn't have this massive pullback, we would see that ARKK would radically and drastically outperform QQQ. But because we have experienced this large pullback, we have to go with what the data says, making a QQQ undefeated as of right now, and it also makes QQQ better than all of the other ETFs before it. So now we have our last contender. Who is going to be the last ETF that QQQ is going to go up against? Now, before we go into our final battle, I do want to say that this video is not to say that these ETFs will always be better than other ETFs. However, we are using the historical data and the returns of these ETFs to compare them with other ETFs so we can speculate about future projections. Now, I do want to say that we cannot solely rely on past performance and historical data to predict future returns, but it does give us a very good idea. So even though in this video QQQ did outperform ARKK, in the next 10 years, ARKK could easily outperform QQQ. However, with the data that we are given, we have to see which one the data is pointing us to, at least right now. I also want to mention that before you invest into these ETFs, I want to point out their expense ratios, because some expense ratios are very high, including ARK's expense ratios of 0.75% coming in at 0.75, and we also see the United States Oil Fund coming in at an expense ratio of 0.83, and in my personal opinion, any expense ratio above 0.25 is very expensive, which is why I love ETFs such as VTI as well as VOO, because their expense ratios are so small and they also give us very good dividends with solid returns. But now is the moment you have all been waiting for. Which investment and ETF is better when we compare QQQ to VGT? Now, this might anger some people, and it really depends on what year we pick to compare these two individuals, because right now, VGT in the last 5 years has outperformed QQQ. We can see that VGT has returned in the last 5 years around 215% as of right now, while on the other hand, QQQ has only returned around 185%. However, if we look at the historical graph with our randomly generated date of 2007, we can see that QQQ has outperformed VGT. However, the current trajectory of VGT does indicate that it will outperform QQQ in the future, and the reason for this is because it is more focused on technology and information than QQQ. Both of these are heavily involved in technology investments, and this is the reason why we see in the last 5 years that VGT has outperformed QQQ. However, historically speaking, we can see that QQQ is not only a safer investment, but it has also appreciated almost $4,000 more than VGT. But it's really up to you. So for this instance, I'm going to call QQQ the best ETF to invest into based on historical data at this time when comparing these top 10 most popular ETFs. Now, for my personal opinion, my favorite ETFs in this order would most likely be QQQ, VOO, and SPHD out of these that are on screen right now. But I would love to hear your thoughts. Comment down below your favorite ETFs to invest into. And if you are not invested into any ETFs, I would highly encourage you to do your own research. Invest into ETFs, dollar cost average into these investments for your entire life, and I promise you, you will build wealth. For instance, just a $10,000 investment in 2007 would have almost appreciated to $100,000. So imagine if you dollar cost averaged more than $10,000 throughout the lifetime of QQQ into this ETF, you would have way more than $100,000. If you would have collectively put in $100,000, you may even have over $1 million in the next 15 to 20 years. So please remember that, put that into perspective. These are all very good investments in my opinion, and I love investing into ETFs overall. But again, remember to smash that like button right now, subscribe if you are new, comment your thoughts down below, and I will see you in the next YT video.